I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com. Welcome back to the show.
Oh, thanks for having me back, Jim.
We have less than a week till the BC election. How is that going to shape up for investors? I guess it depends on who wins.
All I can say is thank goodness we only have a week left. It minimizes the chances for more stupid policy initiatives. I think, as we head down, we're seeing some clear potential winners and losers depending on who wins. And the polls have the NDP and the BC Liberals kind of neck and neck, although I think in that situation it favors the BC Liberals. The problem that the NDP have is getting votes in the interior of British Columbia to get the seats they need to win. And one of the reasons for that is, I think, is their policy platform is pretty hostile towards resource development, particularly natural gas and oil. They're against Kinder Morgan pipeline. Not that that is a huge generator of incentives for BC oil production, but up in northeastern BC, they are sitting on some undeveloped oil reserves, and anything that restricts Canada's ability to get oil to market will hurt the economics of those projects. And of course, we don't know what they're going to do on fracking. We could have a very interesting situation if the NDP were to win and no seats in the interior, or very few, and lots of seats in Vancouver to appease the environmentalist movement. They could put in some sort of restrictions on fracking up north because politically they wouldn't have anything to lose. So it could be a pretty tense few months in the energy space in BC if the NDP win. The energy sector would be much better off under BC Liberals. Same with mining. It's not necessarily in the crosshairs per se of the NDP, but their environmental focus to basically take advantage of the Mount Poly spill and also to head off the Green vote. You can expect them to take a tougher approach to mining, and that's the last thing any miner needs is more government red tape and processes to go through. It would be a real bucket of cold water thrown on the mining industry, and they have enough problems to deal with the markets going up and down like they do. So mining would definitely be a winner under a BC Liberal win. And the other big winner under the BC Liberals would probably be the housing market, at least in the short term. They brought in zero interest mortgage loans, which is set afire under the condo market. So, I don't know how much that's going to, I don't know if that's going to set the stage for long-term development. I don't know how developers are going to react to this surge in the market, whether they see it as sustainable or not. But it's certainly boosting, the real estate sector in terms of brokers and commissions and activity all around that. So on balance, the housing sector is one of the favorites of the BC Liberals, and will probably do as well as it could under them than any of the other two parties. So so basically, housing and natural resources. When I mean housing, I mean the housing sector, those who make their living off of the housing sector, not those trying to buy a home. That's a whole different equation. And the consumer looking to buy a home won't do so well under the BC Liberals, but certainly those in the housing industry, could look forward to another good run here. For how long, we would have to wait and see. Eventually the economics will catch up with the market. And one day, maybe not until after 2020, but one day, the Bank of Canada will raise interest rates, and that will also take some steam out of the market. But that could be years and years away.
We'll have more with Ted Dixon right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're chatting with Ted Dixon. Ted, Canada set a record for exports in March. The exports that led the way were natural gas and lentils. How does a low Canadian dollar help that?
Well, the low Canadian dollar is a gift to price-taking commodity exporters, and so they love it. And it just couldn't be any better. The lower it goes, the better it is for that group. What's ironic, of course, is that we've had Stephen Polo of the Bank of Canada tell us for years that if only we drive down, essentially he's been saying, if only we drive down the Canadian dollar, we'll get a boost remarkably in investment confidence and non-energy exports. Well, we haven't seen either. Any tick up in non-energy exports tends to be in the auto sector when it's on a roll. And we still see resources leading. And, Canada has a competitive advantage in resources, so that's not surprising. Just for the Bank of Canada to try and change all that by driving down the Canadian dollar, all they've done is help, which is fine. The winners in that are the resource area and also the housing area. They've inflated the cost of homes in the country. And that's made some winners and losers out of all that. But those have been the big hot industries that responded to the Bank of Canada's policy, not what the Bank of Canada had intended to do. Now, Jim, we were talking about just before the break about winners and losers in the BC election. You speak about exports. The Premier dropped the bombshell just a few days or weeks ago now on thermal coal exports. Saying that she wanted the Prime Minister to ban them, and or if the Prime Minister didn't ban them, she'd bring in some sort of a carbon tax. Well, this came out of the blue. It was apparently in response to the softwood lumber tariffs in the U.S. But expanding the fight into coal is a bit concerning, and certainly if the BC Liberals were to win. The Premier is saying that she is going to plow ahead with this tax. So the thermal coal industry, which is not huge in BC, but anywhere between 10 and 30% of our coal produced every year is thermal coal, and the coal shippers will be hit. Now we have the Canadian Insider Index. You can follow that on CanadianInsider.com. It's 50 stocks preferred by insiders listed on the TSX. We have both West Fraser Timber and West Shore Terminals in that index, are both BC companies. And when the Premier made her letter public, what happened, Jim? Well, the investors in West Shore Terminal, which are mostly British Columbians and some Canadians, they lost $150 million within hours. West Fraser Timber stock also went down that day. So if the idea was to land a punch on the Americans, the Premier missed, and she ended up, essentially giving some British Columbia investors, a bloody nose. So, you have to be very careful when you start trying to expand your targets in these trade disputes. Because let's not be naive. If we go into coal, I think Americans are going to sit there and go, okay, all those Canadians, they're so smart. They hit us in coal. Well, you don't think they're going to look for other sectors where they can hit us back? So it then, becomes a very bad tit for tat dynamic, and it's one that is a bit disturbing. So we'll have to see if it's a Liberal majority. We can only hope that the trade and coal dispute will simmer down, but there's no signs of that yet. So, so as it turns out, one of the winners, if the NDP were to win, would probably be coal and the transportation groups that ship coal. They have not jumped onto this bandwagon, and wisely so. So it's not all gloom for the resource area if the NDP win, but certainly on balance, though, outside of the coal area, it's hard to see any resource sector benefiting from an NDP win. And in terms of the Greens, they would make it a lot more difficult to extract resources. So I can't see any resource area winning, and they're aligned with the Premier on the coal shipments ban. But they want to focus on technology, and they would probably try and take measures along with the NDP to cool the housing market down. So the Greens would probably favor the tech sector. I don't think the Greens have a chance of winning, but there is a chance they could hold the balance of power depending how the vote breaks out. We could have a minority government, and we'll just have to see. So on balance, it's interesting that on the export side, we're continuing to see energy exports drive the Canadian economy. When you look at what's going to happen after May 9th, we could see a further boost in energy exports if we get the Trans Mountain pipeline through, and the chances of that are greater under the BC Liberals than under the BC NDP or the Greens, that's for sure.
We'll have more with Ted Dixon right after the break.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ted Dixon. Ted, so what are insiders looking at right now? What's hot and what's not?
Well, they're looking at the Canadian market. It's selling off here a little bit as we head towards the summer and a big important Fed meeting in June where they're expected to raise rates. Insiders are starting to pick up some bargains. I think it's early days for the bargain hunting. This sell-off could continue for, our weakness, I should say, is probably a better word, for the next few weeks or so. What your listeners can do is go to CanadianInsider.com. We have our indicator down at the right. Look for that to peak. Once it peaks, that means we've had peak insider buying. When we see some peak insider buying, that often coincides, not always, but often coincides with a market bottom. And that would indicate, that insiders have done all their shopping, picked up all the bargains they can find, and that the market may be poised to move higher. We're not there yet. Our indicator has moved over 100. What that means is there's more stocks with insider buying, key insider buying than selling, so that's a positive. But insiders are a bit early, and we want to see peak buying, and we haven't seen peak buying yet. So we could see a bit more weakness in the Canadian market, and in the U.S. Insiders have been waiting for a pullback for a long time. They're value type investors, and they're cautious right now. They're showing a little bit of signs of coming back into the market, but it's still early days there as well. Let's see how things play out over the next few weeks as we head to this impending Fed rate hike, and we'll have to keep an eye on how insiders react to that. So far, though, I think you can start in Canada. You can start doing a shopping list if there is a major sell-off. Just on no news. If people are just getting scared because the Fed's going to raise interest rates by another quarter point, I think that would be a complete overreaction to the fundamentals. So we're in a bit of a hazy period right now in terms of the direction of the Canadian market, but things should stabilize fairly soon, I would think, because China is still growing. There's some people are saying, "Oh, China's slowing down again." Well, I think what we've got is Beijing is tinkering a little bit here, trying to get some of their credit growth issues under control. So they are cooling down some parts of the economy. But let's not kid ourselves. There's no way Beijing wants to see a Chinese economic slowdown heading into the fall when they have major party Congress taking place, and that's not going to happen. If they really felt that the economy was going to slow down, I think you'd see the monetary taps come on pretty quickly, and you'd see another boost in activity. So I think there's a bit of an overreaction here to some of the data you're seeing out of China.
Has the falling price of oil factored into all this?
Well, the oil market is hard to really get a handle on in any single day because you've got so many speculators and trend players. I mean, look how long it was trading over $100, and for months and if not years, people were saying it's overvalued. Well, it was overvalued. It just took a long time to reset, and now it's going to be testing the bottoms, and we're still in it looks like we're in a $45 to sort of $55 range. It's testing that $45 range right now. I'd be surprised if it breaks much lower than that for a sustainable period. Doesn't mean we can't get there because, as I said, you've got a lot of speculators. You'll have a lot of players trying to get on the bandwagon and ride the trend, which, in the oil market can be quite strong, but it can also be quite short. So it's really hard to say, but in general, Canadian insiders are taking advantage of these dips to buy. And again, we need to see the Trans Mountain Pipeline go through to help get more of our product to market, and that's why this upcoming election in BC is very important, not just for BC but also for the rest of Canada. In Toronto and in other places, they don't always appreciate the importance of the oil industry with respect to wealth generation in this country, and it's very big. And if we continue to strangle it by not providing diversified export channels for the industry, it's going to lower Canada's standard of living. I hate to tell the environmentalists that, but that's just the way it is. So we need that pipeline to be built, and if I'm not sure the NDP can stop it at this point, but it would certainly shake the confidence of some oil and gas investors, I think, initially, until it became clear what would happen with the Trans Mountain Pipeline if the NDP were to win.
Ted, thank you so much for chatting with us.
Oh, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.